Hello guys, I hope you guys doing well. Today we are going to talk about dividends. What is dividends? How to calculate dividends? And does it actually matters for a retail investor? Why it is paid out? Dividend dates. These all things are very important for investors or a trader. Everyone, this is a very important terminologies. You should have good knowledge on these things. Even though people having more than 4 or 5 years of experience in trading, they doesn't know, and they are keep on sending emails. uh, Even though they are holding stocks, they are not getting dividends. Why people are missing dividends? Okay, the dates are very important. When company announce dividends, dates are plays very key role, and you need to know what the dates and how they are going to consider the dates. That I am going to explain each and every point here. And also the people who is new to stock market, uh, if they look at the fundamental analysis comes under this one. Okay, if they look at the dividends, they can see 260%, 2000% like that. Just they will think that the stock is good for investment. It is not like that. Okay, just you have to understand how they are going to calculate a dividend. Okay, now I'm going to explain with example everything here, so you don't get any confusion. If you have any confusion, still you can comment on video, or else you can send an email to me, so that I will clarify you guys as soon as possible. I receive email. Before starting our discussion, please subscribe the channel, so you will get a lot of technical videos, how to understand the stock market and what is the fundamental analysis, technical analysis, everything in detail I am giving here. So then thing you need to do is you have to subscribe the channel. Here we will see what is a dividends. A dividend is a payment made by a corporation to its shareholders. I mean, a company paid to the shareholders, usually as a distribution of profits. When a corporation earns a profit or surplus amount, it can reinvest in a business called retained earnings and pay a fraction of the profit as a dividend to shareholders. Distribution to the shareholders can be in cash, usually deposit into the bank account, we can see that, or if the corporation has a dividend reinvestment plan, the amount can be paid by issue of further shares or share repurchase. This is what is dividend. Actually, the thing, before earlier days, we used to get checks. It is like 20 rupees checks, 30 rupees checks. When we hold some 10 stock, we used to get 20 rupees check. We cannot go and keep the check in bank, okay, because of 20 rupees we will neglect, okay. But nowadays the system has changed completely. We are getting the payments to NEFT, so you don't need to go and deposit checks. Okay, we are getting amount directly into the bank account. Okay, that is a very good thing. You can see still you are facing such kind of issues. Still you are getting checks to your home, so you can contact your broker and you can tell them to activate the online facility. So they will give form. You need to fill that form. So once they activate the service, you will get all the payments through NEFT. And we will see how to calculate dividends. Okay, this is just an screenshot. Okay, I have kept here. Better we will go to one website and we will see money control. Okay, there we will see the prices. Okay, I can explain very clearly over there. This is money control website. Okay, I have opened this website. Okay, we can see here the prices. This is the State Bank of India. Okay, I will show you where to find. If you come down over here, you can see here the dividend is 260%. For the people who are new to the stock market and doesn't know how to calculate this dividend percentage, they feel that this is like a tremendous job they have done and they have given 260% dividend. It is not like that. Okay, you have to look into the face value of the share. Okay, face value is 1 rupee. They are going to calculate this dividend on face value. See, if you look at this, for 1 rupee, 100% is 1 rupee. Try to understand. The face value is 1 rupee. If they are paying 100% dividend, then the dividend value will be 1 rupee. Now, the dividend percentage is 260%. So, we can say that it is a 2.6. 2 rupees 60 paisa they have paid as a dividend. This is like a consolidated dividend over here. Okay, and also we'll see what is the dividend yield. Okay. You have to look into this dividend yield. Better we will take an Excel and we will do the calculation over there, and so you'll get a clear-cut idea. Let me open a spreadsheet. If you open this one, here dividend percentage is 260%. Dividend percentage is 260. Face value is 1 rupee, and yield we can see here 1.04%. Now I am going to tell how to calculate this one. This is the percentage. Okay, we will see how to calculate this one. And also, if you go and see here, the dividend issued somewhere Jan 3rd, 2016, and that time the price was somewhere 196. Okay, we'll put that price. I will tell you why I am taking that price. Price was 196. Our face value is 1 rupee. If dividend is 100%, equal to 1 rupee. So they have paid 260%. That is 2 rupees 60 paisa. Now we will see how to calculate yield. The total is equal to the total dividend 2.6 by the share price, it is 196 into 100. You can see here 1.3. So you can understand that the yield is the actual one. They are paying an actual share value. So if the yield is more than 1%, we can assume that the company is maintaining good dividends. They are issuing good dividends. We can say that. By looking at dividends also, we cannot pick the share. We should not choose that share. This is just a parameter to find the performance of the company. Okay, that you have to keep in mind. Does it actually matters for investors? Yes, it is matter. It is matter a lot for investors. People who wanted to go for long term, for them it is very important. Okay, if some people, if they invest 100 crores, even though 1% equals to 1 crore, it is matters a lot. Since we are very small investors, we do only less amount. So for us, it will be like a small amount. Why dividends paid out? Dividends are corporate earnings that companies pass on their shareholders. There are a number of reasons why a corporation might choose to pass some of its earnings and dividends. A company that is still growing rapidly usually don't pay dividends because it won't to invest as much as possible in future growth. Some companies they don't pay the dividends because they will invest on their growth. Okay, because of that they don't pay the dividends. The dividend dates, which are very important, I was talking about these. Okay, you have to keep in mind, better take a pen and paper and write it down what are the dividend dates. Whenever they announce dividend dates, these terminologies, you can remember them very easily, or else watch my video again whenever you need you get in confusion. The date of declaration. This is the date when a company reports a quarterly dividend and the subsequent payment dates. For example, company announces that 2 rupees is the dividend for the shareholders. This is the announcement they have done. That is called the date of declaration. The date of execution. This is the day you actually initiate the stock transaction, buying or selling. If you call a broker, ask to buy some shares, or you do your own transaction, buying or selling, that is called the date of execution. The closing date or settlement date. This is the date on which the trade is finalized, which usually happen 3 business days after the date of execution. Once we buy the shares, after 3 days only we will get those shares into our account. That is called closing date or settlement date. The ex-dividend date is, ex-dividend means without dividend, because it takes 3 days to process a stock purchase before you become an official owner of the stock. You have to qualify before 3 days period. That 3 days period is referred to as ex-dividend period. This is the date of record. This is used to identify which stockholder qualifies to receive the declared dividend. Because stocks buy and sells will happen every day, so they have to decide, they will take a date of record. Based on that only they will pay the dividends. This is like a payment date, the date on which a company issue and mails its dividend checks to shareholders finally. That is called payment date. On that day we will receive the payment. If it is check, it will take time. If it is an NEFT payment, we will receive within 24 hours. Still I am telling you, if you are not getting dividends, if you are getting checks, sometimes if you are not getting checks also because your address updated something else, you are staying in some other place, so you check with your broker and update your address properly, so you will get your dividends on time. And I hope this video is very useful for you guys. Every investor, you should have minimum knowledge on these things. Okay, not only this, I am going to present a lot of videos. Okay, how we have to analyze the stock market. We should not go and invest blindly without knowing anything. Okay, look forward. I am going to create a lot of videos about fundamental analysis and technical analysis. How we have to analyze, what is the best method to take as a investor, how to gain the money. This is a very important concept. Okay, whatever we do, complete day, complete month, that is not a matter, but finally we have to come up with some profits. That is only the matter, I will say. And please subscribe my channel so you can keep in touch. Okay, if you need some kind of help, kind of thing, okay, you can contact me, ramanju.techhelp@gmail.com. And I am also running online classes. Okay, already some 20 plus classes I have completed. If you are interested, you can join. Okay, with minimal cost I am providing online classes. There I will explain very detailed technical analysis and fundamental analysis also, how to understand the stock in terms of fundamentals, what and all the things impact a fundamentally a company. All the things we are going to discuss there. Thank you so much for watching this video.